Hi, I'm Tina from CMC Markets. Welcome to the weekly outlook where I will be taking you through the key issues and events in the global markets this week. Wall Street finished higher for the week, and there were a lot of optimism towards US debt ceiling talk, a potential Fed rate hike pause, and an AI-powered tech share rally. This week, the FOMC meeting minutes will provide more clues about the Fed policy path, a potential rate hike pause may lift the sentiment again and take the stock markets higher. And the second read of the US GDP data will be released on Thursday as well. The first read, the US GDP only grew by 1.1%, well below 2% as estimated, suggesting that the economy might be going into a stagflation era as slowdown in the economic growth and high inflation would define this economic cycle. And the last one will be the US PCE data, which is a favorite inflation gauge of the Fed. In March, the core CPE still shows there is elevated inflation trajectory. Whether this data could pave the way for the Fed to pause its rate hikes will be awaiting for the data to be released on Friday. On the earnings front, NVIDIA's report will be in the spotlight this week. The chip maker's shares rebounded about 180% from its low in October 2022, and it is only 10% away from its all-time high level in November 2021. Its AI chips are in high demand since this heating up race in the tech companies. However, market expects NVIDIA's earnings to decline on a yearly basis. How will shares price react to the result will be depending on if those numbers could beat expectations. Coming to New Zealand, country's central bank, the RBNZ, will decide on its OCR on Wednesday. The central bank expected to raise the interest rate by another 25 basis points despite a decline in the inflation in the first quarter. But 6.7% of headline inflation was still well above central bank's target of 2%. Number 3 is Australia. The country's retail sales for April will be released on Friday. Retail sales rose for the third straight month in March, reflecting a robust labor market and high wage growth, suggesting that people are still spending despite high inflation and high rates. And this data would also provide clues for the future inflation trajectory. The last one is Japan. Tokyo's core CPI for May will be released on Friday. Inflation climbed to 3.5% in April from 3.2% in the prior month. However, the Bank of Japan insisted on its ultra-loose monetary policy, boosting its stock market to its highest level since 1990 last week. How will this data provide clues for the central bank's policy paths, or how will the Japanese stock market react to it? Let's wait and see. At the last, let's go through the topical instruments that could be affected by the upcoming economic data and key events. First one, Nasdaq. The tech rally has taken the index to enter a bull market, up more than 20% year to date. It had a bullish breakout of the key resistance of the previous high in August 2022. The upside momentum may take it higher if the trend sustains. The second one is ASX 200. Following Wall Street rally, the Australia benchmark index found support at the 50-day moving average. However, the potential head and shoulder top is still in play, with the near-term resistance at the recent high in April. The third, US dollar against Japanese yen. The pair had a bullish breakout of key resistance, rising to the highest level since August 2022. A dovish Bank of Japan and a bullish US Fed may continue to take it higher. The last one is New Zealand dollar against US dollar. The pair has been moving in a range-bound movement, but the Kiwi dollar may be still under pressure amid the recent rebound in the King dollar. A breakdown below the 100-day moving average may send the pair lower. Let's see how the RBNZ will steer its near-term movement. That's all on the horizon for this week. If you have any questions, please leave a comment and I will get back to you. Subscribe to the channel to keep in touch for the future videos. I wish you have a great week ahead.